The purpose of this video is to review my trades from December 1st up until December 21st. Now, overall, this month has been pretty flat for me. I took some big losses that wiped out most of my profits. But overall, I'm still sitting at $451 profit. There's still about 1 week left. Next Wednesday is Christmas. The stock market is closed. I believe it also closed earlier on certain days next week too, because we still have until the following week, December 30th and 31st. So hopefully I'm able to at least close out December with $1,000. That would be nice. The month of December, I have a mixture of red and green days. Mostly greens, there were some reds. The ones where I had red days, I took some big losses. So let's go ahead and dive into some of the losses. December 2nd, and I would recommend everyone to review their trade journals. And if someone don't have a journal set up, definitely set up some kind of journal. I'm using TradeZilla. It's a great platform. Yes, it costs money, $25, maybe $30 a month or something, but it's well worth the money. It helps me become a better trader. So the first big red day I had for this month was on December 2nd. The loss that I had was for ASTS. So ASTS appears to have a strong support here around $22 level. And that's one of the reasons why I've kind of gotten in the trade. Now, of course, the trade didn't work in my favor, so I had to take a loss. So that's one loss from trying to flip risky call options. Now, I've also made profit on the same day. I closed out my NVDX shares at $219. Here's my second red day. December 9th, I had a loss of $892. And this one had a 66% win rate. So I lost money from MSTX. MSTX is the micro strategy leverage ETF. So another one where I bought a risky call options hoping that it would go up. Instead, it kept on going down. So I had to close out the trade and I took about $1,000 loss. And here's a third loss on Friday. Third loss was APP. APP is the App Loving Corporation ticker. And again, I took this one. I actually bought put options because I thought because the RSI was so high, surely it will drop. I was wrong. And I should have factored in the volume. The fact that there were strong volumes pushing into the upside, there were not many selling. In fact, selling did occur when it reached the top. But it was too late for me. I already got in on put option around this candlestick here. And this is where I lost everything. I should have closed out earlier when I saw it kept on going up. But instead, I was waiting for it longer and longer. And I said, all right, I already lost 90% of the value at this point. So I might as well just wait and see what happens. Because there's still a chance if it drops, it can drop really fast. But of course, this never happened. From November 25th up until December 20th, App Loving never dropped. And in fact, it didn't even went below the put options I bought it for. So I felt like this was like a fake out. I should have factored in the volume. If right here had a strong volume where it pushes towards the downside, then it probably makes sense for me getting on the put option. And next time, I'll factor in the overall market. If S&P or NASDAQ drops and I see a strong volume for this ticker, then it probably makes sense to buy put option. But if those two conditions doesn't exist, then I don't think it makes sense to buy put options. So yeah, those were my three biggest losses. Came from risky options play. Now, of course, I made money off other setups too. So I'll show you guys some of the ones where I made money on. I made money off call options on SOXL, $102. And then I have NVDX, $10. NVDX, another $104. ZS, close out the call options. So this is a risky call option, but I got lucky. On this one, ZS went in my favor. I made $207. And then UiPath, I closed out my long positions. I held UiPath for 6 months and I only made $35. But hey, it's still profit, But I felt like there's better investment opportunities elsewhere. So that's the reason why that I didn't want to continue holding on to Path. And then here's another good day on December 19th. I made $468. So this is one of the more consistent strategy here. So SPX is an index for SPY, S&P 500. December 19th, I set up a SPX credit spread. SPX is an index for SPY or S&P 500. I made about $235 through the credit spread. Stock sell call options, I made $60.33. And another stock sell call options, $172. So that netted me with a total combined of $497 gross profit, $30 commission. For the month of December, it appears that I've lost money from risky call options and put options. I've also made money from risky options as well. So, that's not really consistent. And going forward, I would put more criteria as far as buying call or put options. Now, there is one strategy I have for this month, and that's probably the best setup I have. One consistent strategy that made me money every day so far, at least for 1 week in a row. So let's go ahead and add a filter on SPX. SPX is the S&P 500 index. SPXW, that's how Fidelity categorized the widespread. So for my SPX credit spread, net profit is $695. Trade win is 50%. Profit factor is 1.38. Day win percentage is 100%. Now, the reason why it shows 50% is because that is the nature of a credit spread. You have to buy one and sell one. One is going to lose and one is going to make you money. So for credit spread, the trade win rate doesn't really apply for it because that's just the nature of the concept. It's not really meant for day trading with a stop loss kind of stuff. I have made profit every day this week, ever since I started it this week. Monday, I made $100. Tuesday, $149. Wednesday, $86. Thursday, $235. Friday, $122. And here's a nice calendar view. So out of all of my trades, credit spread, selling call options, those are my two consistent profit-making strategies. I've also made profit from flipping calls and puts, but those are not consistent. There were days where I make a lot of money, and there were days where I lost a lot of money. But this credit spread so far made me $695, and this is a strategy that I would like to dive into more details in my next video. I hope everyone had a great trading week. Next week will probably be slow because I don't think there's any news or much major news. Let's check out marketwatch.com and look for any major news for the next coming week. So December 23rd, Consumer Confidence Report. I don't think this is a major economic event or news, so I don't think this will have much bearing to the stock market. December 24th, on Christmas Eve, durable goods orders. Historically, I don't see this moving the stock market like that. New home sales, I really don't see this being a major factor. Christmas is going to be closed, and then after Christmas, okay, so potentially there's another initial jobless claims report coming out. So this could break or make the stock market. And then Friday's the advanced U.S. trade balance in goods, which I don't see this being a major news like that, to be honest. Maybe I'm wrong. But these are the upcoming news, actually. I would say out of all of these events, December 26th for the initial jobless claims, this is the day where it could potentially have the highest volatility. And also the fact that December 26th is after Christmas, there's a concept called the Santa Claus Valley. I'm not sure if anyone heard of that concept or not. And we can probably plug in the Santa Claus Valley. According to Investopedia, Santa Claus Valley, what it is and means for investors. A stock market rally during the last 5 trading days of December and the first 2 trading days of January. According to this, since 1950, during this 7-day trading window, S&P 500 has gained an average of 1.3% and has been positive 79% of the time. Now, Santa Claus Valley is not always true because I ran some codes, I look back at it, and it doesn't always come true. But historically speaking, if someone wants to generalize it, yes, there is such a thing as Santa Claus Valley. Here's some key takeaways. The Santa Claus Valley specifically occurs during a 7-day period during the last 5 trading days of December and first 2 trading days of January, with historical data showing positive returns about 4/5 of the time. The S&P 500 has averaged a 1.3% gain during this period since 1950, with even stronger average gains of 1.6% when considering data back to 1928. Theories for the rally include increased holiday shopping, seasonal optimism, end of tax year considerations, and less institutional trading since many cut back on activity during the holidays. Okay, that makes sense. And here's a nice little chart. Santa Claus Valley since 1990. There were more gains than losses for the stock market. Now, last year was not Santa Claus Valley. So it looks like last year had a negative 0.9%. And then the one before that was on 2015. So historically speaking, if the Santa Claus Valley comes in place, then I think this is a good time to set up more sizing on the more riskier play. So we'll just take it one day at a time. The next video, I will explain how I set up my credit spread, key takeaways, and just overall concept and understanding it. And how someone like you can also implement credit spread if it makes sense to. And I'll lay out some scenarios where it makes the most sense and scenarios where it doesn't make sense to implement credit spread. Don't forget to like and subscribe. Talk to you guys next time. Peace.